Good morning. This is Horizon's Middle East and Africa, our top stories this morning. We are live from Saudi Arabia's Future Investment Initiative Summit, where we will be speaking to some of the world's biggest names in business and finance, including an exclusive sit-down with Goldman Sachs CEO David Solomon in the next hour. Israeli Prime Minister Benjamin Netanyahu says he's now open to a short truce in Gaza, a deal that could secure the release of a small number of hostages held by Hamas. And South Africa's Pick and Pay Stores says it will be listing its low-cost boxer business in what could be the continent's biggest IPO this year. Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates, 7 a.m. over here in Riyadh in Saudi Arabia. I'm Joanna Versace at the FII conference in Riyadh. It's going to be a busy couple of days. We have a fantastic lineup of guests coming up on the show. But before we get into the show, as ever, let's just do a quick recap of markets, because we are right in the heart of earnings week this week. So many companies reporting. And just to give you an idea, today alone, you've got 39 companies reporting $4.7 trillion worth of market cap. You can see the futures are trading slightly negative as we get into this big earnings day. S&P dipping down about 0.2%. The Nasdaq also down a similar amount after ending up in the green yesterday. A lot of focus on the price action in energy. Yesterday by the close, Brent was down about 6%. You can see we're trading at a $71 handle now, $71.40, as geopolitical premium starts to get priced out of these energy markets. And then 10-year yields continue to move higher. We are at 4.27 now, about 1 basis point higher on the session, but still up about 15 basis points over the last week. Yesterday, of note, we did have 2-year and 5-year Treasury auctions that didn't do so well. They came about 1 to 2 basis points behind where they were going into the auction, which tells you perhaps that investors may start pricing in or are starting to account for higher deficits out of the U.S. in coming years, and that has been a big theme for markets as well. Switching over to our terminal chart today, given we are in Saudi Arabia, I thought it was interesting to just show you this line chart of U.S. production versus Saudi production. You can see quite clearly from that Saudi production has been moving lower because, as we know, OPEC Plus introduced these voluntary cuts a couple of years ago. Saudi Arabia have been adhering to those lower production cuts, but U.S. production has done nothing but go up, and people often fail to realize that under the Biden administration, oil production in the U.S. has climbed steadily higher. So that yellow line is U.S. oil production, fully compensating for the cuts in Saudi oil production, which is why the market is now focusing back on fundamentals and the fact that there seems to be extra oil supply in the market versus the demand outlook. So I'll park that thought there. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Yesterday, Avril, we were talking a lot about some of the price action in the Nikkei after those inconclusive election results. Tell us how the markets are reacting today.
We're seeing stocks in Japan extending gains from a day ago. They are holding up remarkably well despite the political uncertainty in the country. And going the other direction, we're seeing how Chinese equities are mostly sinking today. But I think the backdrop of all this is also important to consider, because it is a big week, not just for U.S. earnings, but also some of the big names that are reporting in the Asia region. Along with that, the U.S. political risk. So this is what you're seeing against that backdrop. Let's take a closer look at what we're seeing in the Japanese currency. It is moving further away from the levels that it hit just a day ago, the 153.8, that bit of weakness to your point about the uncertainties in Japan. But we also have, some analysis from our Bloomberg news team and how in uncertain periods, especially in the lead up to US elections, if you look back at history, that the yen tends to be the safe haven of choice, whether bucking the trend versus gold or versus the greenback. So something to keep in mind as we keep an eye into next week. Jumana.
Excellent, Avril. Thank you so much for that overview. Well, as you were speaking, we just got some results hitting the wire. HSBC have just come out with their third quarter earnings, and it is a beat, very strong on both the bottom line and the top line. So pre-tax profit for the third quarter coming in at $8.48 billion versus estimates of $7.6 billion. So that is quite a substantial beat, I've got to say. Third quarter revenue also coming in at $17 billion versus the $16 billion estimates or thereabouts. CET CET1 ratio sitting quite healthy at 15.2% versus 14.9%, so still sitting on a ton of capital. In terms of their guidance, CET1, they see it within the medium-term target range of 14 to 14.5%. Target cost growth of about 5% for 2024 versus 2023. A lot of focus, of course, on HSBC cost guidance, given the restructuring announcement that they came up with just a couple of weeks ago. There will be a lot of scrutiny on what this actually means in terms of synergies for the business, and the fact that they've announced that they're combining their commercial and investment banking businesses. But then also one of the big takeaways today is HSBC have announced a buyback of $3 billion as well. So putting it all together, healthy beat on top line, bottom line. They've announced a $3 billion buyback. The guidance is similar to what they had before. But of course, the market is going to be looking for further signals on how the restructuring that was announced last week and the combining of their investment banking and commercial banking business is going to save them some costs and create some synergies in the future. So that's HSBC. Right. As Avril was just talking about, Asian equities have made gains as traders prepare for the U.S. election and key economic data that will set the stage for the Fed's decision next week. So let's bring in Sebastien Page, CIO and head of global multi-asset at Rowe Price Group, joining me on set here at FII. It's great to have you with us in Riyadh.
Great to be here. Thank you.
So many narratives that we can talk about right now in the U.S. Obviously, the elections are coming up. But let me just start with the state of the U.S. economy, because things actually seem to be okay. I mean, a couple of months ago, we were talking about the possibility of a hard landing. And now IMF are forecasting growth of 2%. Atlanta GDP now is tracking around 3%. How do you see the U.S. economy at this point?
There are always reasons to worry. Right. Unemployment in the U.S. has come up 70 basis points. The manufacturing PMI is at 47, which indicates a contraction, not an expansion. But like you just hinted, I challenge the bearish narrative. I lean on the bullish side. I don't think the economy is slowing. I think you're right. GDP now, which is a nowcast that uses all the latest data, is running at 3.3%. It was 1.9% at the beginning of the year.
So then why did the Fed cut 50?
The Fed cut 50 because the Fed funds rates were uncomfortably high relative to where inflation looks to be running right now. So you're talking above 5% Fed fund rates and inflation that is stabilized in 2.5%, 3%. The Fed is not comfortable with that difference. It's too restrictive for them. But by the way, I think financial conditions are actually loose. Just look at credit spreads.
Yeah, I mean, it also explains why perhaps we're seeing this massive rally in stock markets. But there is something that I've been paying attention to, and that is the fact that yields have been trending steadily higher ever since that 50 basis point cut. I was just talking about it. 10-year yields are now close to 4.3%. What is that? Is that just the market potentially accounting for a Trump win at the elections next week and the possibility of higher tariffs and higher deficits to come? Or is it that inflation expectations have started to tick up again?
It's tempting to come up with a simple explanation. And if you look at the betting odds on a Trump win, they kind of are moving with the 10-year right now. But it's way more complex than that. We're talking about a deep, broad market for U.S. Treasuries. I do think that inflation expectations quietly trending up is part of it. I think growth expectations trending up is part of it. I do think some more inflationary policies potentially coming up after the election is part of it. And yes, we're running fiscal spending pedal to the metal. We're running at fiscal deficits that look like in the past we would be in a recession, 6-7% of GDP. At some point, that starts to worry investors in the Treasuries market.
Yeah, we're not there yet. Near term, though, the elections are coming up. The VIX has started to price in more volatility. We're up at around 20 versus, say, the 6-month average of around 13%. Do you think investors this week, even though it's a big earnings week, are going to be more cautious getting involved in the market here simply because of the uncertainty of next week's election results?
Look, earnings always matter, and markets will react to earnings. You're right that the implied volatility is high going into the election, which is normal. And if things go okay, and please don't ask me to define okay, but just okay.
Not contested results.
Yeah. Well, then volatility should come down, which generally is good for markets. So you often see markets do well after an election. Now, it's really hard to forecast exactly what's going to happen. I could give you a very simple narrative saying, okay, maybe the probability of a Trump win is increasing. Small cap should do well, but we should watch for inflation risk. The reality is we don't know the outcome. We don't know the policies that are really going to be implemented depending on who wins. And we don't really know how the market is going to react to those policies. Yeah. So a lot of uncertainty. But as we get through this, I think markets will do okay.
Yeah, well, markets seem to be always doing okay. What do you make of the hype around AI? Is that set to continue?
You know, we think long-term, the hype around AI is real. One of my colleagues, he runs a technology fund. He likes to say that AI is going to be the greatest productivity boom for humanity since electricity. He likes big statements. We do think AI is real. Right now, the amount of capex, the amount of spending on AI is extreme, and we see that slowing down, and there's a lot priced into markets. So if you ask shorter term, in our asset allocation committee, we actually long value stocks relative to growth stocks.
Where do you see financials? We kicked off the earnings season. I've got to say, the bank's earnings came in really strong. We're speaking to David Solomon in about an hour's time. But very strong start. Do you like owning the banks here? What do you think of financials?
You know, financials, different parts of our investment platform likes financial and others don't, so we don't have a house view. So overall, though, a steepening yield curve can be good for strong companies, strong financials, not necessarily regional banks. But if you think about just how banks work and net interest income, you're lending at a longer term rate and you're borrowing or using funds at a shorter term rate. So the steepening of the yield curve should help the financials, and just economic growth should help the financials as well. So we like financials, we like industrials, we like healthcare as well. Okay,
brilliant. That's a good place to leave it. Sebastien, great to chat to you. Have a great time here in Riyadh. Sebastien Page, CIO and Head of Global Multi-Asset at Rowe Price. Thank you. All right, still ahead on our show today, our exclusive interview with the Saudi firm ACWA Power about the kingdom's solar mission. But first, Israel's cabinet moves its regular meeting to an undisclosed location over fears of Iran's retaliation. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh today. Israel's parliament has passed a bill to restrict the main UN organization supporting Palestinians. The bill bans the UN relief and work agencies, the UNRWA's activities within Israel's territories. And the move comes as Israeli Prime Minister Benjamin Netanyahu says he's open to a short truce in the country's war with Hamas that would lead to the release of a small number of hostages still held by the Iran-backed militant group in Gaza. Let's bring in Bloomberg's Paul Wallace, who's in Dubai. Paul, maybe just talk us through what we know about this short-term truce. Is the likelihood of this truce getting any closer?
Hi, Jumana. It certainly does seem like progress, given that these ceasefire talks regarding Gaza have been stalled for so long now. 2-3 months. Take your pick. So that is progress of sorts that negotiators are meeting in Qatar, including Israel's main negotiator, the head of Mossad, and they're talking about different options. The latest proposal is for a very sort of short-term ceasefire of about 2 days for the release of 4 of the roughly 100 hostages still held by Hamas in Gaza. Benjamin Netanyahu, Israel's prime minister, has said he is open to that idea. However, it's clear that there's still a lot of things that would need to be agreed between Israel and Hamas before even such a short-term deal happened. There is some thinking in Israel that the government is trying first and foremost to see whether Hamas still has sort of, let's say, a cohesive negotiating stance, because it's lost, it lost its leader to an Israeli assassination, Yahya Sinwar, not so long ago. So there's a lot of confusion among the negotiators as to what Hamas's stance is right now, and whether it even has, whether there's even cohesion within the group. So I think that's one of the things they're trying to find out. The bottom line is, I don't think we're going to get a ceasefire imminently. There's still too much to overcome for that.
Yeah, and possibly the U.S. elections as well to watch out for, Paul. The other big news overnight, and we were just talking about this, is that Israel have actually passed a law that will restrict the UN's main aid agency for Gaza. What does the passing of this law actually mean for the UNRWA organization, and what will Israel do in response, given that it's going to restrict the flow of humanitarian aid into the Strip?
So I think this is a pretty significant decision by Israel's Knesset, its parliament, last night, to effectively ban the UN Relief and Works Agency from operating in Israel. That doesn't stop it from operating in Gaza and the West Bank, the Palestinian territories. However, in a practical sense, it's extremely difficult to see how it can carry out its aid delivery operations in Gaza if it can't also use things like warehouses and other logistics facilities within Israel itself. The bill, this law is effectively meant to, let's say, come into practice in 90 days. So there is still some time that may lead to negotiations between UNRWA and Israel, and maybe even Israel's Western allies, because they, to put it mildly, are not happy with this decision. Certainly European allies like France and the UK, they've very much condemned it. Even the US has said it's not happy. In fact, the US has been telling Israel that if it doesn't get more aid into Gaza by next month, sort of shortly after the US elections, then the US might have to put restrictions on the military aid it gives to Israel. So I think there's a lot that's going to have to happen in the coming weeks over this.
Yeah. Paul, thank you so much for the reporting. Bloomberg's Paul Wallace in Dubai. Now, coming up, a struggling supermarket chain, Pick n Pay, is hoping to woo investors after announcing Africa's biggest IPO this year. We are live in Johannesburg next. This is Bloomberg.
We need better governance. We need transparency on policies by the government, laws and regulations. We need technology. I think one thing I want to mention, in addition to traditional investments, what Saudi Arabia can do by deploying modern technology that has enabled the transformation that many of you are seeing in the Kingdom of Saudi Arabia. Technology is a big enabler.
That was His Excellency Khalid bin Abdulaziz Al Faleh, Saudi Arabia's investment minister, speaking to me here at Riyadh's FII, and we will be having another one-on-one interview with him later today. Now, South Africa's Pick n Pay has confirmed it will list its low-cost Boxer business on the Johannesburg exchange by year-end to raise up to 8 billion rand. The offering is part of the supermarket operator's turnaround plan and will be the continent's biggest IPO this year. For more, let's bring in Bloomberg consumer reporter Janice Q. Janice, it feels as though there's a lot of excitement around this prospective IPO. Why is that?
So this is going to be the biggest IPO in South Africa since 2017 and the biggest on the continent this year. And that is what investors are hoping is going to be the start of an influx of IPOs and fundraising. it's been very lackluster for a number of years, and so there is quite a lot of optimism around this. And the JSE has actually, the Johannesburg Stock Exchange, has climbed 30% since June, and that's largely on the back of the formation of this coalition government. It's pretty business friendly, so that's also what's part of the optimism.
Yeah, but what are the expectations for this specific IPO in terms of sizing, pricing, and then just also how it sort of weaves into the more positive sentiment that has emerged in South Africa since the elections?
This specific IPO Boxer has got 500 stores across South Africa. Half of those have been added in the last 7 years. The food consumer space is exceptionally tight in South Africa. The biggest player is ShopRite. It's pulled back from a lot of the rest of the continent and has really focused locally in South Africa. It's catering across the full spectrum of customers. From the lower end, mid-range, and it's captured a lot of the upper end of the market, which traditionally was catered to by the likes of Woolworths Food and Pick n Pay. Woolworths has been doing exceptionally well in the food space. It is somewhat distracted by some other issues it's got in the clothing side, but on the food space, it's still got that upper end of the market. But Pick n Pay is facing all of this turnaround in this very tight space, and so a lot is hinging on Boxer's IPO.
Yeah, no, absolutely. Well, we look forward to your reporting on how it goes in the next few days. Bloomberg's retail reporter, Janice Q, thank you so much. Now, Starbucks is telling its corporate staff that they could be fired if they don't work in the office 3 days a week. A memo seen by Bloomberg shows the coffee chain is implementing a standardized process from January to hold workers accountable. The move comes less than 2 months after Brian Niccol took over as CEO. Well, a quick look at equity futures before we head to the break, because it is shaping up to be quite a pivotal week for U.S. earnings. We've got plenty of companies reporting today, including the likes of Google, Visa, AMD. That's about $4.7 trillion worth of market cap that is just going to be reporting today. And then, of course, more of the big tech names later this week, in addition to the first reading for the third quarter GDP and jobs figures on Friday. So plenty of hurdles to get through in U.S. markets by the end of this week. S&P futures, NASDAQ futures, we're leaning more negative, now moving steadily higher. We're down about 0.1%. And as you can see, European futures are sort of trading sideways. A lot of focus has been on the energy complex, though, as we've been speaking about yesterday. Oil was down 6%, seeing some stabilization come through today. But then the market is now beginning to focus on fundamentals once again as geopolitical concerns start getting priced out of the market. So there's your picture of Brent. $71 is where it's trading in terms of handles. Now, coming up, Saudi Arabia plans to neutralize carbon emissions by 2060 with a push into solar, wind, and green energy. We'll discuss that mission next with the ACWA Power CEO, Marco Arcelli, here at the FII conference. This is Bloomberg.
Works in function.
Good morning again, everybody. This is Horizons Middle East and Africa, our top stories this morning. We are live from Saudi Arabia's Future Investment Initiative Summit, where we will be speaking to some of the world's biggest names in business and finance, including an exclusive sit-down with Goldman Sachs CEO David Solomon next hour. Israeli Prime Minister Benjamin Netanyahu says he's now open to a short truce in Gaza, a deal that could secure the release of a small number of hostages held by Hamas. And HSBC reports its third quarter results as the lender embarks on aggressive restructuring plans and a fresh share buyback. It's just gone 8:30 a.m. across the Emirates, or 7:30 a.m. here in Riyadh in Saudi Arabia. I'm Jumana Versace. Quick check on markets as we went to break. I was just highlighting that it is a massive week in terms of earnings coming up. Today, the likes of Alphabet are going to be reporting $4.7 trillion worth of market cap just reporting today. And then, of course, by the end of the week, we get more from the Magnificent Seven reporting. And it all escalates into the non-farm payrolls print on Friday as well. So lots to watch out for. Today, futures are leaning towards the negative. We had a better close for Wall Street yesterday. Brent also in focus, trading at 71.50 now, down 6% yesterday in trade. So massive day of declines for the energy complex after the Israeli strikes on Iran didn't reportedly hit any oil infrastructure, which meant that the energy market breathed a sigh of relief in terms of what it had priced in geopolitically. And then taking a look at 10-year yields as well, 4.27% is where we are at. But let's switch over. I just want to show you a chart, given we are in Saudi Arabia. And one of the big stories of Saudi Arabia, of course, is that the kingdom has been cutting back its production of oil given the voluntary cuts put forward by OPEC+. And here you can see from that chart that the yellow line, which is U.S. supply, has been steadily increasing while Saudi Arabia's production has dropped in line with those OPEC+ production cuts. It tells you that some of the reduction has been fully compensated for by the increase in U.S. supply. And that is one of the reasons why there is downward pressure on Brent and has been for the last couple of months now, because people are expecting somewhat of a mismatch between the demand outlook and the supply that is hitting. So something to bear in mind. All right, let's also get a check on how markets in Asia are faring. Avril is in our Singapore studio standing by. Avril, what's on your agenda today?
Yeah, Jumana, I'm watching what traders are watching, and this week is all about elections, earnings, one more US data ahead of the Fed next week. And you get the sense that investors are really pulling money off the table. They don't want to take unnecessary risk amid all this. For the second day among the EMFX complex, we're seeing the Indonesian rupiah, the Malaysian ringgit among the worst performers. The offshore renminbi is back above 715 against the greenback, something we haven't seen since August. We're seeing a bit of firming on the yen, maybe a bit of that safe haven element there. But let's flip the board and take a closer look at stocks in Japan as well, because we are, after all, in the early innings of earnings season there. And this chart, courtesy of MLive's Mark Cranfield, shows you that we are actually seeing that underperformance among consumer discretionary stocks versus the topic, suggesting there's room for catch-up. And why I'm highlighting this bunch of stocks is if you look at the earnings season so far, Japanese stocks have mostly surprised to the downside. The outliers are really the consumer discretionary names. So these are the ones that, could make that broader rally on the topics a bit more prominent as well. Jumana.
Avril, thank you so much for the overview. That was Avril Hong in Singapore. Well, Saudi utility firm ACWA Power is continuing to expand globally and at home following a Saudi government target of signing 20 gigawatts of renewable energy contracts every year until 2030. Joining us now here in Riyadh is Marco Arcelli, the CEO of ACWA Power. It's great to have you with us, Marco.
Thank you.
Good to be chatting to you.
Thank you for having me.
So you are CEO of one of the largest utilities firms here in Saudi. It's involved in both power generation and in desalination. I'm just curious to hear from your perspective how you would say the scope of your business has shifted from traditional fossil fuel powered energy sources towards more climate friendly solutions in the last few years.
It's an amazing race that I see here in Saudi Arabia, the Middle East, and in general emerging markets where we operate. Saudi Arabia has one of the most ambitious decarbonization programs in the world to cut 278 million tons of CO2. That's like the total emission of a large European country, so it's really massive. Part of that is to shift generation from basically oil-fired generation today or yesterday to 50-50 renewables and gas. In the renewable program, you mentioned the numbers, it's really massive what we're doing here. 70% of that program is assigned to PIF, the Sovereign Wealth Fund, and we are responsible on behalf of PIF to deliver that. So to give you an idea, we went from being roughly no renewables only 5, 6, 7 years ago in Saudi Arabia. Today we have 3 gigawatt under construction and a massive 16 gigawatt under construction today.
Yeah, and even outside of Saudi Arabia, from what I can see, there's only one project under construction that will use fossil fuels outside of Saudi Arabia. That's in Uzbekistan. All other projects seem to be renewables. Is this essentially how the business is going to be moving forward?
Absolutely. Renewables today are not built because of ideology. They're built for economic sense. They're the cheapest, the fastest, the most secure. And in countries where you have land, it's certainly the technology that with scale can allow and enable not only the decarbonization but the growth of the local economy. The prices that we can achieve in renewables in these countries are often a third or a quarter of the equivalent fossil price.
Yeah. So Bloomberg, our news colleagues, reported earlier this month that PIF is creating a company called Energy Solutions that are going to be focused on so-called green hydrogen energy production. I know that you've also been a pioneer in that space as well. Is that an area that you also, ACWA Power, will be looking to get involved as well? Sure.
ACWA Power is the first mover probably in the green hydrogen space. We have two projects under construction already. One is here in Saudi Arabia. It's the NEOM Green Hydrogen Project with our partners NEOM and Air Products. Great companies. We are already over $4.5 billion invested in the project, which should start production at the end of 2026. It took us about 3-4 years to develop that project. The second project in Uzbekistan, it took us less than 1 year to go from we start talking about it to we sign all the agreements and we break ground. And it will be 1.5 years before it starts production at the beginning of next year.
Well, we talk about these very bold targets that the kingdom have set in terms of renewable energy production. But then you've got to finance that somehow. How are you looking to finance?
Our business model is non-recourse project financing. So of the roughly $20 billion a year that we invest in energy, water desalination and green hydrogen, about, I would say, 14 billion roughly are project finance. So they come from commercial banks around the world, often mediated or complemented by the ECAs, export credit agencies, development finance institution. We have a great relationship from EBRD to IFC to the African, Asian development banks. And then of the 6 billion of equity, we tend to keep about 1/3, so about 2 billion. 4 billion, we look for partners around the world. So we're trying to bring the best, not only technology, but also financing and equity partners to deliver the most affordable solution for the local communities.
Earlier this year, you did mention, though, that ACWA Power may be looking to do a rights issue about 1.9 billion in size. Is that still going ahead?
Yes, we're working on that. Of course, the board has approved it. It will be brought to the General Assembly. And if it will be approved, it's something that we will use to continue to finance our growth.
So no concerns about high valuation or timing then?
So for me, the stock price is not something that I look at. Of course, the stock has done very well recently, but we need to focus on the business.
Okay. I know that also we spoke a little bit about what you're doing outside of Saudi Arabia, but I think you have previously said that about 25% of your investments may be in China in the years leading up to 2030. Can you give us some more color on what you have planned there?
Yes. So why did we choose China? We have a goal of tripling the size of the business by 2030 to $250 billion under management. We are now just under 100. So the growth is massive. The years are few, and so we need to focus on few markets where we can deliver. China is certainly the biggest market in the world. You know that half to 2/3 of the global installations every year are in China. Our relationship in China starts a long time ago, 15 years ago, and the relationship with Chinese companies is about $40 billion between supplies and Chinese investments in our projects abroad. So it is now the time for us to look concretely at investing in China. Also, the relationship between the two governments is very strong. So I think that all the ingredients are there. There's a market, there's a relationship, and there's a speed that we can tackle.
Well, final question. I'm probably going to be bumping into you again in 2 weeks' time at COP29. Can I just ask you, as one of the industry leaders, what you're hoping for out of COP29 this time around?
These big events are also a catalyst for agreements between companies. So we're going to sign 5 agreements here in FII for a total of more than $1.7 billion, and those are real. It's not MOUs. I expect that in COP29 for our company we will sign much more. for projects around the world. In general, COP, I think that there was a breakthrough last year with this transitioning away from fossil fuel that recognizes we need to do it. We need to do it fast, but it's a transition. So there's a role for gas, there's a role for other technologies, and we all need to work concretely to deliver a better world.
Yeah. Marco, we're going to leave it there. That's a good place to leave it, and hopefully I'll see you in a couple of weeks' time. Marco Arcelli, the CEO of ACWA Power, with me here in Riyadh. Well, coming up, we're going to take a deep dive into Middle East markets as stocks in Dubai rally in the third quarter. Analysis with Daman Investments next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Riyadh today. Let's get back into Middle East markets and a rally that has propelled Dubai stocks into the ranks of the best global performers. But that looks set to cool as geopolitical risks increase and bargain valuations become harder to find. The city's index has outperformed most peers in the third quarter with higher property prices and an influx of tourists boosting shares. Let's bring in Divye Arora, Head of Portfolio Management at Daman Investments. Good to have you with us, and thank you for joining us in our Dubai studio. I'm sorry I'm not there today. Maybe let's just start with an overview of the stock picking environment here. We talk about the macroeconomic backdrop, which so far has been quite constructive, even though some economies are cooling down in the region. But more so, there's a lot of focus on geopolitical tensions. How is that impacting the selection process, your end?
Good morning, and thank you for having me on the show. So, if we look beyond geopolitics, we have always been very much focused on the fundamentals. What we can say is that if you focus too much on geopolitics, you will miss out strong rallies which are happening, especially in the Dubai market. If you would have sold MR and MR development 1 month ago, you would be picking it up now at least 8 to 10% higher. So what we do is that whenever we see such kind of events, we actually go and start to pick these names up, because we do our research based more on the fundamental side, and we believe Dubai fundamentals are pretty solid right now. We can see that there is a strong macroeconomic growth going on. The population is growing more than 2% in Dubai. We have seen that there have been labor and visa reforms which are bringing a lot of skillful workforce into the country, and that has really changed the game over here. And what has that done? It has also brought in a lot of demand from the end investors into the UAE property market. And that is what we have seen, that is evident in terms of the record sales. That is seen in case of MR, Aldar. They have been growing their sales at more than 40 to 50%. And that is going to be delivered in the form of the strong earning growths north of 20% for both MR and MR development over the next 2 to 3 years.
Yeah. It sounds like you're still pretty positive on construction stocks within the UAE, so you don't think there's too much hype in that space then? And also, let me just ask you, how do you feel about construction stocks within Saudi Arabia? We believe in Dubai and especially also in Abu Dhabi real estate market. The reason why that is so is that even if you look at the prices right now, the price per square feet, if you're looking at, let's take Dubai as an example, we are talking about $450 per square feet over here. And when we compare against the top markets in the world, take example of Singapore, Hong Kong, New York, London, the prices in New York and London are almost 4 to 5 times that of Dubai. The prices in Singapore and Hong Kong are almost 12 times that of Dubai. Also, when we look at the affordability ratio, when you compare the value of the property to the household disposable income, that's around 3 to 4 times over here in the UAE. And when you compare against, property market in London, in Hong Kong and Singapore, it's pretty stretched over there. That's around 10 to 13 times. Obviously, there is a factor of supply that these markets such as Singapore and Hong Kong are tight in terms of new supply, but then still the gap is huge. So we believe that there is a strong reform story which has been played in Dubai, and that should continue to, make sure that we have a gradual increase in prices. Obviously, there will be cyclicalities because there could be certain years where the supply is not going to match the demand, right? So there could be some volatility over there. But we see that there is a trend for the prices to go higher from here. When it comes to Saudi Arabia, the prices are also going higher over there. But when it comes to the real estate, basically, there are not too many companies that you can play.
especially on the residential side. There is a company called as Retail recently, which has been doing pretty well. They are getting a lot of projects from Roshan in terms of the Saudis' agenda to increase the household penetration in terms of the housing to 70% levels from current 63% level. There is also, we like basically Arabian Centers over there because Arabian Centers has a strong mall business. It is not a developer, but there is a lot of demand when it comes to the retail assets over there in Saudi Arabia.
Yeah. Divye, I'm just conscious of time here. I do want to ask you about the outlook for some of the local banks. I was just speaking with a guest earlier about this strong start to the bank's earnings season for some of the U.S. banks and picking up on some signals from European banks as well. How are you feeling about the outlook for some of the local banks, especially now that the Fed has started their easing cycle?
So when it comes, if you look at the results of late, results have been pretty solid. We have seen loan growth in Saudi trending north of 12%, in Dubai trending north of 10%. The NIMs have been more or less, all over the place, depending on the banks you're looking at. How we are looking at the market right now is, or the banking sector right now is, we are looking at the banks which have positive, impact from the rate cuts. So there are two banks in the region that we see. One of them is Al Rajhi Bank, and the other bank is SNB. As the rate get cut, both of these banks have got a very strong retail loan book, and that's why they will have a strong NIM expansion. Also, if you go back, these banks were seeing a strong CASA erosion when the rates were getting higher. Now, as the rates get cut, the CASA can get stabilized, and then over time, these banks can bring in more CASA. So we are optimistic on these banks. At the same time, these banks also are benefiting from a strong demand for the mega projects, and as the rates get cut, the retail loan growth, the mortgage loan growth can also bounce back in Saudi Arabia.
Yeah, very clear. Divye, a pleasure to have you on. Thank you so much for giving your overview of some of the stocks and sectors you're interested in the region. Divye Arora, Head of Portfolio Management at Daman Investments in Dubai. Thank you. Well, coming up, we're going to break down the latest figures from HSBC and Santander. Speaking about banks, a look at those big bank earnings next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Riyadh. Now, HSBC announces a $3 billion stock buyback after reporting better than estimated earnings. The bank's third quarter pre-tax profit rose 9.9% to $8.48 billion, beating estimates. And Bloomberg's China correspondent Min Min Lao joins us right now. Min Min, let's just start with what we got from HSBC, because it seems to me like a strong beat both on the top and on the bottom line.
Yes, we're seeing profits and revenue beating estimates. Pre-tax profits, as you said, up almost 10% in the third quarter, and revenue as well beating forecasts by about $1 billion. We're likely to see the stock move after markets reopen from the lunch break. That shares repurchase of up to $3 billion, likely to be very positive for investors. And we were hoping to hear a little bit more details about that restructuring plan, because this was just days after the company unveiled this huge restructuring plan, merging its investment banking and commercial banking divisions, and also carving out its UK and Hong Kong operations into standalone units and folding the APAC and Middle East into a Eastern regional division. So we're hoping to hear a little bit more details on that, but the company has reiterated that it will provide more elaboration on that only at its annual earnings report that's expected in February next year. And reining in costs, that is really key, given that profits are likely to be more or less stagnant given the rate cutting cycle that we are seeing, and operating expenses that was still up by 2% in the third quarter. Year to date, the first 3 quarters so far is up 6%. So more still needs to be done if the company wants to meet its cost guidance of 5% growth this year. So that's something to watch very closely. We might get a little bit more of the impact showing up in the final annual earnings.
Yeah, and a couple of interesting points you raised there, especially on the cost front, given that they have guided to 5% cost growth for next year as well. And then vis-a-vis those organizational changes, they're not going to be implemented until January 1st. So we still got another quarter to get through before those synergies that you speak of start coming together. Let me just ask you, though, they've also announced a $3 billion share buyback. How is that likely to move the needle on the stock?
Well, definitely, it's going to be positive for the stock. We might see the movement at the top of the next hour. Investors have been watching this very closely, especially given the new CEO has taken over, whether these restructuring, the cost-cutting initiatives is really going to be bearing fruit, if it's really relevant for the organization, or if it's just, the CEO trying to make its mark, but not actually really quite changing things on the ground. So that's something to watch very closely. As you said, it could only show up next year in terms of its impact on the company's bottom line, but certainly the huge share buyback, $3 billion, and the better than expected earnings report overall, that's going to be quite positive for the company stocks.
Min, thank you so much. That was Bloomberg's China correspondent, Min Lo, getting us up to speed on all things the HSBC earnings. Big beats on both the top and the bottom line, also announcing that share buyback. Also keeping a close eye out for Santander earnings, which are going to hit at any moment in the next 10 minutes or so. A quick look at some of the key markets, though, before we head out for our first hour of Horizons. We have another hour coming up. Remember, we've shifted to a 2-hour show now for the next 6 months. But futures are leaning slightly negative, moderately so. We're better than where we were about an hour ago. S&P futures basically around flat, and the European markets not doing a lot either, inching towards the green as we head into the European Open. Treasuries, a quick look at how the price action is doing over there. There has been an upward pressure on yields. We're trading at around 4.27 now, about 1.2 basis points higher on this session, but still up about 15 basis points in the last week or so. And then finally, oil has been in focus. Yesterday, the energy complex came up under a lot of selling pressure, down 6%. Today, we're stabilizing at around $71.50 for Brent. Well, that's Horizons Middle East and Africa. I'm Jumana Bersachi in Riyadh. Stay with us because we have a second hour of this show coming up with Jennifer Zabazaja and our exclusive interview with Goldman Sachs CEO David Solomon. Stay tuned.
This is Horizons Middle East and Africa, our top stories this morning. We are live from Saudi Arabia's Future Investment Initiative Summit, where we'll be speaking to some of the world's biggest names in business and finance, including an exclusive sit-down with Goldman Sachs CEO David Solomon. Israeli Prime Minister Benjamin Netanyahu says he's now open to a short truce in Gaza, a deal that could secure the release of a small number of hostages held by Hamas. We are live in Jerusalem with the latest. And Europe's biggest automaker, Volkswagen, is planning to close at least 3 factories and eliminate thousands of jobs in Germany. It has just gone 9 a.m. across the Emirates, 7 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to the second hour of Horizons Middle East and Africa. And as we mentioned to you, we do have a busy day. And let's just cross over to Riyadh now, where Jumana Bersachi is standing by for an exclusive conversation. Jumana?
Thank you, Janya. Thank you so much. We're live in Riyadh for the FII conference. And joining me right now is a very special guest. We've got the CEO of Goldman Sachs, David Solomon, with us. I just want to start off with the big news that has come out today, which is Goldman have announced that you are looking to open up an office in Riyadh's new financial district. CAFT, you're also one of the first banks to apply for this RHQ license. It really feels as though Goldman is reaffirming its commitment to Saudi Arabia and to the region.
Well, thank you for having me, Jumana. I'm delighted to be here this morning. And yes, we are excited to be opening up a new office in the financial district. And I would say we are committed to our presence here in Saudi Arabia. I was reflecting, last night around the past 7 or 8 years that I've been coming to this event and just watching the progress here. And the progress has been meaningful. And we've participated in that progress. It's interesting to watch our clients here on the ground participate in that progress and be in a position to try to help them. But also, as you look at the international community is more interested in what's going on from an economic development perspective here. And we're delighted to be positioned to help our clients in this region.
Yeah, and it feels like there is so much deal making. Even IPOs last year was a great year in terms of activity across all these exchanges, which means also more and more banks are looking to get involved in the action. Are you finding it difficult to retain and attract talent given increasing amount of competition?
We have a very, very deep bench of bankers around the globe, including, here in the region. We have a number of bankers from the region that base out of London and sometimes move back to this region. We've been able to attract talent. We're Goldman Sachs. We've been able to attract talent here in this region and other places in the world. I do agree there's more competition here, but that's a positive. Actually, the levels of activity are picking up, and I feel very, very confident in our ability to have really extraordinary people on the ground here to serve our clients very well.
One of the stories that our Bloomberg News team have been reporting on is the fact that the PIF have been sort of refocusing some of their investment efforts domestically, which means that in terms of the relationship with asset managers in the region, there's been a lot more focus on or questions asked about what some of these asset managers are delivering on the ground within Saudi Arabia. How do you think that is going to shape up the asset management ambitions within the region and specifically within Saudi Arabia?
It's a very, very natural progress, and we've been talking about what's going on here in the kingdom. But the level of investment in diversifying the economy here in the kingdom is significant, and of course that's a significant focus of the PIF. For a firm like Goldman Sachs, where we're well positioned to serve as an investment banker, to serve as a trader, to serve as an asset and wealth manager, I think the firm's incredibly well positioned to help in this part of the world regardless of the trajectory. So we're excited about what's going on here and excited about the opportunities we'll have to help serve our clients here.
Can I ask you what your level of concern is vis-a-vis the geopolitical situation in the region right now?
I'm concerned about the geopolitical situation in the region. It's not good for security. It's not good for safety. It's not good for economic growth. And I'm hopeful that leaders both in the region and around the world and important governments around the world will be able to find a path to settle it down as we move forward. But, of course, anytime you have geopolitical uncertainty, that's not good for economic growth and prosperity. And one of the things I just noticed, I spend time with people here on the ground, people want to find a path to a secure, prosperous, economically vibrant Middle East.
Has it impacted business trading in the region?
It's interesting. People are obviously concerned and very, very focused, but it's not had a significant impact on activity up to this point, on activity in this part of the region.
Well, let's just talk more broadly. Your earnings came out very strong, surpassing expectations. Obviously, the stock has had a good run this year. You must be feeling good, but let me just ask you how you're feeling about the outlook in general.
I feel good about the outlook. I think, if you took a tour around the world, the U.S. economy is actually doing quite well. It's been very, very resilient. I'm a little bit more concerned about European growth and also the economic situation in China. But overall, the engine of the U.S. has been quite powerful, and our business, while global, is quite correlated to U.S. growth. I can give you a list of things to worry about, but generally, I can tell you also a list of things that I'm quite optimistic about.
Yeah.
The progress around technology and AI and the opportunities to increase productivity are real. Progress that we're seeing around healthcare and medical technology are extraordinary in the impact that they'll have. So there are a lot of reasons to be optimistic about the growth and trajectory of economies around the world.
Yeah.
But there's also fragility and things can go wrong.
Well, I was going to pick up on that because it's been really difficult to sort of track the narrative around the U.S. economy the last few months because we've gone from hard landing to soft landing. Now people are talking about no landing. I'm not going to ask you for a descriptor of the U.S. economy, but what I will ask you is where are some areas of concern that you're seeing right now?
Well, the base case in the U.S. is certainly at this point for a soft landing. That doesn't mean that at some point there can't be, some sort of a slowdown in economic growth. But what I would say is the U.S. economy is proving to be incredibly resilient. We do have an election in the U.S., and there'll be policy decisions that come out of that election. And so, certainly those will have an impact on the trajectory in 2025 and 2026. With respect to, European growth is more sluggish at the moment. And I'm concerned about the same things that many people I know are talking to you about at this event. Geopolitics, U.S.-China relationship, the situation in Ukraine, the situation we just touched on in the Middle East. Also, concerned, broadly about inflation in the world, concerned about energy policy, which is obviously a significant issue. I'm concerned about immigration and migration, which is an issue in different parts of the world. So these are all issues that require leadership and policy direction. And I'm hopeful as we get past the election in the U.S. and we continue to move forward, we'll see a clear direction of travel on some of these significant policy issues.
Well, I mean, the other big development is obviously the Fed have started cutting interest rates. And I think you were asked about what your expectations were for the Fed the last time, and you said a 30% chance of a 50 basis point cut. So we'll give you that. They went for the 50. But what matters more, do you think, for financial markets? How quickly they go or where they end up eventually?
I think there's an awful lot of attention on short-term rates. I'd actually be focused over time on longer-term rates. And, I continue to be concerned about the level of spending and deficits in the United States. I don't think that's a short-term, crisis factor, but unless we have policy change and get our spending and our debt under control, ultimately that's going to have a bigger impact on long-term rates than I think people are anticipating today. With respect to the short end of the curve, I think it's going to be very data dependent. And that data will be driven in part by what kind of policy we see coming out of the election.
Yeah.
And so I think it's important to watch carefully. It seems like the Fed has been relatively transparent that we'll get another interest rate cut before the end of the year. But after that, I think it will be very data dependent on what kind of policy implementation, what happens to growth. Are the inflation numbers actually improving further? Those are all things I think the Fed will be watching carefully.
Can I just circle back to your first point vis-a-vis spending, though? 10-year Treasury is trading around 4.3%. Do you think that is adequately pricing in the fiscal premium in the years to come in the U.S.?
The market's the market, and so it is absolutely pricing in the premium that the market perceives today. What I would just say, if you look at the trajectory of our spending and our debt and the interest burden that we have, I think over time is through the rest of the decade, et cetera, we'll have to bring new buyers into U.S. Treasuries, and that will potentially have a risk of putting pressure on longer rates, unless we want to finance the whole Treasury stack at the front end of the curve, which would be a very, very significant policy shift.
Yeah. I want to ask you a little bit more about your trading numbers, because they came in very strong, stronger than expectations. And earlier on, you had guided that fixed income trading was going to see declines. But overall, for the quarter, you ended up posting quite strong trading results, namely on back of your equity trading business. Was this sort of a one-off because there was so much volatility in equities this quarter, or can we expect that momentum to continue?
Our equity franchise is performing very, very well. We have the leading equity franchise of the big banks. It's something we've invested in and built over a long period of time. I can't tell you quarter to quarter what the market environment will put up for that franchise, but we are positioned very well to serve our clients and have a leading share position in that business. When I commented about our trading revenues in early September, at the very beginning of September at a conference in New York, the business was softer. It had been softer in August, particularly in fixed income. We had a very, very strong comp from the third quarter in 2023, and ultimately our fixed income business was softer year over year. But I did say when I made that comment that it would be very, very dependent on what happened in September, and we actually had a more robust September than we expected.
Yeah, a lot of volatility in the markets. Do you think you can continue to gain market share on the trading side?
We do believe there are opportunities for us to continue to take share, although we're operating in a leading share position, so those gains will not be as pronounced as they've been over the last 5 years. But we think we have a very, very powerful ecosystem in our global banking and markets franchise. Our 1GS operating ethos is helping us serve our clients in a very, very forward and exceptional way. And if you are patient, you take a long-term view, you earn trust, you show up for your clients in good times and bad, over time you gain share in these businesses, and we're very focused on that.
What does the outlook look like right now for deal making?
The outlook for deal making is improving. I talked on our earnings call about the fact that our M&A backlog had improved. I talked about some headwinds, particularly on the regulatory side. I think the regulatory environment has been a headwind to some deal making. Obviously, with an election, we could see a change in that context, but there's no question the deal making environment is improving. And when you look at what's going on with technology and the investment that's necessary, to power AI, I think that's a tailwind for deal making over a period of time too.
Yeah.
A lot of change, a lot of opportunity, and when there's change, leaders are constantly looking to make sure that they're positioned strategically to have a leadership position as the world evolves.
Well, I know you've also been making a big push into your alternatives business. Private credit is an area of focus. What is the opportunity that you see there? Because it really feels like that has become the major focus of the market. Many different players are looking to get involved in that space.
Well, we've been in the private credit business for over 30 years. We have $140 billion of private credit assets. We've been a leading private credit player since the 1990s. What I would say is there continues to be secular growth around the opportunity set for additional private credit formation. And we're very, very well positioned, given the way the firm sits, to be a very, very unique player in that. Obviously, in our asset management business, we manage significant private credit assets, but we also have one of the leading syndication franchises. So we have an ability to originate and distribute in addition to be an investor through our asset management business. That's a very unique combination. I think it positions our firm very well. And you will see, in my opinion, continued secular growth in private credit formation. I still think we're early in that cycle.
What do you think lower interest rates do for the private credit landscape, though, given so much of the debt is floating?
I think that private credit, it's not immune to lower interest rates, but there are different ways that we can finance activity. And private credit's a very important part of that. People use private credit as a very, very broad term. Are we talking about insurance companies financing investment-grade companies? Are we talking about investment-grade financing? Are we talking about below investment-grade corporate financing? Are we talking about direct lending to small and medium-sized enterprises? These are all different forms of private credit. And the reality of it is, regardless of what the interest rate environment is, people need to finance. And so, of course, in the short term, movements in interest rates have an impact in short-term activity. But we're talking about the engines of finance that drive capital structure in a whole variety of ways. This is not something that's cyclically tied to short-term interest rates.
Yeah. Can I just get an update on how you see your consumer finance business and the pathway ahead for Goldman?
We've been very clear over the last few years that we're narrowing our consumer focus, and we've taken active steps to do that. We continue to have a very, very powerful deposit platform under Marcus, but we continue to take steps to narrow our consumer activity. We're focused on our two big businesses, global banking and markets and asset and wealth management, and we feel good about the way we're positioned.
Well, we've been speaking for, I guess, like 15 minutes, and I still haven't brought up the big U.S. election coming up next week. Let me just ask you this, because as a bank, I'm sure you would have run scenario analyses on what will happen either way. What would you say is the biggest risk for your business for either outcome, a Harris win or a Trump win?
We're watching the election like everybody else. The good news is it's coming up, next week. And, my hope would be, shortly after election night, we have a clear direction of travel in terms of what the next administration will be. Goldman Sachs is set up in position to help and support either administration, either outcome, and to support our clients in either of those outcomes. And so we're watching like everybody else. It's going to be a close election, and we'll see in the next couple of weeks what the direction of travel is.
Do you think it might have a direct knock-on effect on regulation and some of the regulatory stances taken?
There's no question that the regulatory pendulum has swung, pretty significantly over the last few years. My hope would be in either administration there'll be a fresh look at how we can ensure regulation's important to keep guardrails in the economy and to keep our economy moving in an appropriate way. But at the same point, that pendulum can swing too far, and then it can become a headwind to growth. And I'm hopeful, on both sides of the aisle, there'll be a fresh look after the election to make sure we get that balance correct.
David Solomon, going to leave it there. Thank you so much for taking the time to speak with us, and enjoy the rest of your time in Saudi Arabia.
Thank you. It's my pleasure. Nice to be with you, John. Thank you.
That was David Solomon, Chairman and CEO of Goldman Sachs. Thank you very much. Well, coming up, Israel's cabinet moves its regular meeting to a special undisclosed location over fears of Iran's retaliation, as Prime Minister Netanyahu says he is open to a short truce in the country's war with Hamas. We have the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Israel's parliament has passed a bill to sharply restrict the main UN organization supporting Palestinians. The bill bans the UN Relief and Works Agency's activities within Israel's territories. The move comes as Israeli Prime Minister Benjamin Netanyahu says he's open to a short truce in the country's war with Hamas. Joining us now for more on this is Bloomberg's Dan Williams in Jerusalem, who, of course, has been following this story very closely. So, Dan, thanks for being with us. So, exploratory Gaza truce talks were held yesterday. I mean, did anything come out of it?
The fact they were held is perhaps promising. There was really a 2-month gap in those talks previously. So this shows an effort by some of the parties, at least, Israel, 2 Arab countries that have been mediating with Hamas, and the United States, which has been supervising the whole process, to see whether in the wake of the killing just 2 weeks ago of Hamas's leader, Yahya Sinwar, in Gaza, there might be a new opening, perhaps new flexibility on the part of the Palestinian group when it comes to releasing at least some of the hostages it holds in exchange for a truce of some kind in the Gaza Strip. According to Israel, those talks ended, and now messaging has to be relayed to Hamas by Qatar, by Egypt, to see how open Hamas is. We also had one of those mediators, Egypt, saying pretty much in conjunction with those talks that it would be interested in putting forward really a very, very small deal, which would constitute 2 days cessation of fighting in exchange for the release of a small number of hostages and presumably a small number of Palestinian prisoners by Israel. And Israel has expressed openness in principle to this. We're also hearing that as far as the mediators are concerned, as far as third-party countries are concerned, even if this is just a drop in the bucket of trying to resolve this crisis, it would at least be a chance for Hamas to prove that it still has open channels. It can still deliver on a truce, on a hostage release, despite having lost its leader so recently in Gaza.
So, Dan, this could potentially be a turning point in the war. I mean, what though could derail any sort of progress on this front? You mentioned a lot of players that are sort of a part of these negotiations that are happening. Is there anyone that could potentially be the outlier to any sort of resolution here?
Well, to judge from the stance of Netanyahu's critics, he's been accused within Israel of perhaps not being as keen as possible on exploiting every opening because of political concerns, because of an electoral stopwatch given the upcoming US election, perhaps thinking that whoever is elected, whoever will be in the White House next, might be better or worse for Israel, and it's worth Israel biding its time. He denies this, of course. It's also worth remembering that a raid against Israel is not only Hamas, but Hamas's sponsor, Iran, and other Iranian proxies, which have been fighting Israel, which have been attacking Israel from places as far-flung as Lebanon, Syria, Iraq, Yemen. So presumably, if Iran is not on board with a deal like that, it would be hard to push forward. On the other hand, Iran has also taken quite a drubbing recently, given Israel's attack over the weekend. It may be in a position where it's doing its own strategic rethink and may see this opportunity as a way of diffusing the Gaza situation, diffusing other fronts, and buying itself a reprieve while it does a strategic rethink.
And Dan, just on the front with Israel in particular, we did get some news that Israel is about a year away from, in a sense, stepping up their own air shield. I mean, why is this significant to the broader picture and the crisis that we've been paying close attention to?
This is presumably a game changer, not just for Israel, but for the entire world of missile defense. Israel says that a year from yesterday, so less than a year from now, it will field a pioneering laser-based interceptor system. What does this mean? Israel has a pioneering interceptor missile-based system whereby it shoots at incoming ballistic missiles, rockets, drones, the occasional mortar bomb with missiles that cost at the very least $50,000, $60,000 a piece. And of course, when you're dealing with bigger threats, the price tag goes up to about $3.5 million per interception. Now it says that for short-range threats, it will have a laser interceptor. This will focus a high-energy beam on the incoming threat, burn it up, blind it, disable it in mid-air, and essentially neutralize the threat. And the Israelis say each interception will cost as little as $5. So it changes the entire economy of long-term confrontations. It also eliminates the risk on the ground of debris from interceptor rockets. We've seen that repeatedly during this war. And it will also make Israel's enemies or anyone who might be facing someone equipped with this sort of equipment wonder if there's any point of trying to hemorrhage the budget with sustained barrages when shooting them down is actually so cheap.
Bloomberg's Dan Williams, always great to get you reporting in Jerusalem there. Dan, great to have you. Thanks so much. Now, let's turn to the Middle East still. World is as it is. This is what Ruth Porat, president of Alphabet, said while discussing women progression towards the financial leaderships during a panel moderated by Bloomberg's Jumana Bersetchi at the Future Investment Initiative in Riyadh. Here's more on what she's had to say.
If you don't build the pipeline early, you'll never have it when you need it at the end. So I think every one of these elements actually, like any process we have in business, needs to be understood. Human capital is the most valuable asset any of us have. If you want to unleash it, you want to inspire it, you need to be deliberate about process. I would say I actually disagree with Noel on the sponsor point. I think it is absolutely imperative to have a sponsor. You can earn one and find them, and you must be one. I'll just give you one example. When I was starting out at Morgan Stanley, I was on a deal with somebody who never took me to any internal meeting. And a month or so later, I was brought into something and the senior partner said, "Oh, is this the I that I keep hearing about?" It became clear he was taking credit for all my work. So I went and found somebody who had a reputation of being one of the toughest around, really smart, would take risk on me. Worked for him in a pretty boring first assignment, but that got me onto one of the most iconic hospital takeovers to this day, the Gillette takeover that was in the book From Good to Great, and opened a door for the rest of my career. And it was because I searched out somebody who would take risk. Same example that I gave on the trading floor. In that case, he actually initiated it. So I think it can come both ways. But I do think that when you're stuck in a job, as I tell women all the time, I think as leaders, we need to, if the match doesn't work, you've got to find something else, because otherwise you're just pounding your head against a wall and you'll never get through. So you do need to own your career. You do need to own your destiny. You do need to use your voice. You do need to manage it. But the world is as it is, and we're trying to change it as quickly as we can. And that requires rigor and process. I think just telling women keep aiming at it, but we're not actually putting our money where our mouth is and building all of the networks, the process, the promotion rigor, the compensation rigor, we're not going to get the result we allegedly want.
Ruth Porat, president of Alphabet, speaking at FII in Riyadh, and we'll bring you more of those conversations in just a bit. But this news just came in. Boeing has announced the pricing of its share offering. Stock will be offered at $143 in its near $19 billion share sale. The plane maker is looking to address liquidity needs and stave off a potential credit rating downgrade to junk. Last week, Boeing factory workers rejected the company's latest contract offer, which included a wage increase of 35% spread over 4 years. We have more coming up. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. We are live from Saudi Arabia's Future Investment Initiative Summit, where we'll be speaking to some of the world's biggest names in business and finance. Israeli Prime Minister Benjamin Netanyahu says he's now open to a short truce in Gaza, a deal that could secure the release of a small number of hostages held by Hamas. We are live in Jerusalem with the latest. And Europe's biggest automaker, Volkswagen, is planning to close at least 3 factories and eliminate thousands of jobs in Germany. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Bersetchi in Riyadh, where it's just gone 8:30 a.m. Welcome to the second hour of Horizons Middle East and Africa.
It is a busy morning for you there, Jumana. Let's just take a look at where the markets are positioned ahead of the trading day. As we mentioned, it is going to be a busy day. If we take a look at where U.S. equities are a bit unchanged right now, but that coming after most stocks started the week off in the green ahead of what we mentioned was one of the busiest weeks of corporate earnings. Of course, we are a week out from the U.S. election, and we're getting a number of data points this week from the U.S. in terms of economic data points. The NASDAQ similarly, slightly tilting upwards right now, but we are getting some Mag 7 earnings today with Alphabet coming later today. We're watching very closely also to crude inching slightly up right now, 71.46 right now, but that's coming after we saw it tumble about 6% on Monday. Traders dissecting the potential for easing hostilities in the Middle East. And as we have done the past few days, we're looking closely at the 10-year yields, declining ever so slightly, close to 426.81 after rising for a third session on Monday. We also did see auctions of 2- and 5-year notes. I want to also bring you this chart on Bitcoin. We don't always get to talk about it, but I think it is notable to just take a look at what Bitcoin is doing. We're seeing excitement around the cryptocurrency gaining as the betting odds increasingly favor a Republican win in the U.S. election. It has risen right now. It is just below that $71,000 mark. But on Monday, we did see it rise to above 71,000 for the first time since June. And it is up now, right now. Options traders are so bullish, though, on Bitcoin that they're thinking potentially it could reach a high of $80,000 in November, regardless of the outcome. So that is something we are paying close attention to. Let's pivot, though, to markets in Asia and see how Avril Hong is doing over there. Avril.
I'm doing fine, Jen, and so are some of these Japanese stocks. I mean, for a second day, they are defying expectations and, seeing those gains despite the political uncertainty in the country. And today, the gains are being led by the banks and the insurers amid overall these higher U.S. yields. That is a backdrop in which they tend to benefit from. We're also seeing a firming in the yen, erasing some of the steep losses from a day ago. But if you look at the rest of the region, there is a bit of risk off. It's, after all, a big week for earnings. We have U.S. data as well. And then, of course, next week, the U.S. election. So rest of Asia looking pretty negative. Helping the Hang Seng to stay in the green today, though, is the stock of HSBC among the big boosts for the benchmark there, as we see how its profits have beat. It's also announced a share buyback of up to $3 billion. The trade is getting their first chance to react to this after coming back from the lunch break. That is the surge. You're seeing 2.6% on the stock. Jen.
Thanks so much, Avril Hong in Singapore for us. Let's pivot from Singapore to Johannesburg, back to Riyadh, where Jumana Bersetchi is standing by. Jumana?
Truly international show. Thanks, Jen. Barclays is considering re-entering the Saudi Arabian market to capitalize on the kingdom's growing needs for capital markets access. Now, speaking to Bloomberg, the CEO, CS Venkatrakrishnan, said the bank is planning to grow its team across the Middle East, focusing on investment banking and trading. The lender's plans were revealed on the sidelines of the FII summit in Riyadh. Meanwhile, deals worth over $28 billion are expected to be announced during this week's gathering of Wall Street and tech royalty in Riyadh. So joining me now is Bloomberg Saudi Bureau Chief Christine Burr. Good to have you with us.
Thanks, Joe.
It feels like the Super Bowl of Riyadh being here right now. Everyone around from all over the globe is set to be here. We spoke to Richard Atias yesterday, obviously the president of FII, and he was saying that it's also an opportunity not just for discussions, but deal making, $28 billion in deals.
Absolutely. So first, it's so exciting that we're sitting here together in the capital city of Riyadh. It's going to be such an exciting day ahead. We've got a very, very busy day. Some of the biggest names in global banking and finance descending on the capital. We're going to hear just over the next couple of hours alone from the likes of BlackRock's Larry Fink. We have David Solomon, who you just spoke to. He's also going to take the stage. Citi's Jane Fraser. I mean, they are all coming together, and we actually are going to be live blogging throughout it all. So our viewers will be able to get the play-by-play. And what we're expecting to hear, really, the themes are probably going to be heavy on tech, heavy on AI, of course, geopolitics and the U.S. election. election will also play. And that's just all in the next couple of hours. Over the next 3 days, we are expected to get deals worth more than $28 billion. We're expected to see announcements on aviation, in technology, and specifically on AI. And the other really big thing today, Jumana, that we're going to be looking out for is whether we hear from Crown Prince Mohammed bin Salman himself. So he makes the rounds usually, but doesn't tend to speak publicly. So if he does speak today, that'll be big news.
Okay, well, that's something to watch out for. And obviously AI has been a big theme. I was in Saudi, as you know, about a month ago for the Saudi Gain Summit. That was an AI summit and sort of just served to highlight some of the plans that the kingdom has underway to get more involved in that area. Yesterday, I was on a panel speaking about women leadership, but still with the Ruth Porat, who's the president of Google and Alphabet. She was saying it's her first time ever to FII, and I think that in itself is quite noteworthy because typically some of these big tech names wouldn't be involved in FII.
Yeah, that's so true. When you look at the agenda in previous years versus the agenda this year, you really can see that there has been this pivot in Saudi Arabia more towards artificial intelligence and more toward technology. We're actually going to have 2 panels later today happening around 5 p.m. that are focused on artificial intelligence. And earlier this year, we reported that Saudi Arabia was considering launching a fund with Andreessen Horowitz, possibly backed by $40 billion in capital to invest in AI. So Ben Horowitz will be speaking on that panel at 5 p.m. We will be looking for perhaps some kind of announcement in AI. I mean, we're told something is coming. So that is a lot of the chatter on the ground this morning.
Yeah. Christine, let me just bring it back to the price of oil, where oil is trading. You and the team have done a lot of work about the state of Saudi public finances, wider budget deficits, current account deficits for years to come. How do you think that's influencing just the trajectory and the direction of the Saudi economy from here onwards?
Well, look, there's so much interest around Saudi Arabia at the moment, right? Because it's spending so heavily to diversify its economy under the Vision 2030 agenda. And you can see that just with the Barclays comment that they're re-entering Saudi. We heard from General Atlantic heading into FII as well that they are opening their first office in the Middle East to take advantage. But the reality is Saudi Arabia is in a really challenging position at the moment. You have low oil prices, as you said, budget deficits being projected out until 2027. And then on top of that, you're seeing this challenging foreign direct investment environment. And all of that has really created the situation where Saudi Arabia has had to reprioritize some of its spending. It's been focusing more on its domestic economy rather than investing internationally. That's something that has spooked Wall Street. We have reported this. So we will be looking to see what people have to say about that. And then another key theme is that Saudi Arabia has been issuing a ton of debt. We've seen it from the likes of Aramco, the PIF, I mean, the government itself. Something like $50 billion worth of bonds have been issued so far this year. So it's a really interesting backdrop, right? You have such massive investment potential in Vision 2030, but at the same time, a low oil price environment, challenging fiscal position for Saudi, and a lot of debt coming to the market.
Yeah, well, some people call it a maturing economy as well, moving to the next stage. Christine, great to chat with you. We'll check in with you later as well. Bloomberg Saudi Bureau Chief, Christine Burke. And now for a look at some of the other stories that we're following today. Saudi Arabia's financial services firm, United Internationals, is $264 million IPO sold out in minutes, indicating strong demand for listings in the region. Its parent company, United Electronics, is selling a 30% stake. The deal came on a busy day for new share sales on the Middle East on Monday. And supermarket Lulu, which is looking to raise $1.43 billion from its Abu Dhabi IPO, also sold out soon after the books opened. Blacklane, a luxury chauffeuring startup backed by Mercedes-Benz, has raised 60 million euros in its latest funding round. The new round has drawn from money from Tasaru, a subsidiary of the Saudi Public Investment Fund. The fundraising values German firm at more than 500 million euros. Coming up, a struggling supermarket chain, Pick n Pay, is hoping to woo investors after announcing Africa's biggest IPO this year. We are live in Johannesburg next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. South Africa's Pick n Pay has confirmed it will list its low-cost Boxer business on the Johannesburg Stock Exchange by year-end to raise up to 8 billion rand. The offering is part of the supermarket operator's turnaround plan and will be the continent's biggest IPO this year. For more, let's bring in Bloomberg consumer reporter Janice Q, who is standing by with me. So, Janice, as the Johannesburg Bourse gears up for this IPO, I mean, why is there so much excitement? We mentioned where it sits relative to the rest of the continent, but give us a sense of why this is important.
I mean, besides it being the biggest in Africa this year, it's actually the biggest in South Africa since 2017. So that's going to bring some confidence. But also, investors are really hoping this is going to be the start of a surge of IPOs and fundraising. The South African benchmark stock index has climbed 30% since June. So that was shortly after the elections. And we've got this new business-friendly coalition government. So that's bringing renewed optimism.
So tell us a little bit about Boxer and how it relates to the rest of the landscape in terms of grocery store chains here in the country.
So Boxer caters to the lower end of the market. It has 500 stores across the country. Half of those have been added just in the last 7 years. So its growth has been pretty impressive. And it's been a star performer both for Pick n Pay, the parent company, but even across the landscape. I mean, in the broad brushstrokes, Pick n Pay has been struggling for some time, and this IPO, which they will retain a majority in Boxer, helps with fundraising for themselves. They did some earlier fundraising, but this IPO itself is up to 8 billion rand, and that'll definitely help Pick n Pay. The largest grocer on the continent is Shoprite Checkers, and they have really expanded in the last few years. They've pulled back from the rest of Africa somewhat and really focused their attention locally, and they're catering from the lower end through to the upper end of the market. The upper end was traditionally held by Woolworths Food, and Woolworths has been somewhat distracted. Their food is still doing really well, but their clothing side has not been doing as well. And so there's a really interesting dynamic going on at the moment. It does make it harder for Pick n Pay to bring this turnaround in this really tight market.
Wow. It's fascinating to watch how things are playing out. And we know you'll be sticking on top of it. Janice Q, our consumer reporter here in South Africa. Thanks so much, Janice. All right, now let's stick in the region. African countries are paying a steep cost for the inflated risk perceptions they are getting from ratings agencies. Standard Bank CEO Sim Tshabalala told Bloomberg's Jumana Bersetchi African countries have been rated from a subjective basis. He spoke at the Future Investment Initiative Institute conference in Riyadh alongside Saudi Arabia's Minister of Investment Khalid bin Abdulaziz Al Falih.
The idiosyncrasy and the subjective factors going into risk assessments by ratings agencies contribute to roughly $75 billion in added costs and foregone revenues by African countries. And so this perception issue does make a massive difference and needs to be addressed. And my colleagues have also alluded to how that gets addressed. It gets addressed by rational policy making, orthodoxy in fiscal and monetary policy, and orthodoxy also in industrial and labor policies. And that's precisely what has happened in South Africa. With the GNU coming into place, you've got classic commitments to the rule of law, structural reforms, rational policy making in terms of fiscal policies and monetary policies, and all of a sudden, like you correctly point out, the rand has rallied, all our assets have rallied. We project that South Africa will grow at 1.1% this year and 1.9% next year. But if the trends continue and the structural reforms continue, we could be growing at 3% next year. Some of the data supporting that is in our middle market, small businesses, small to medium enterprises. Since the elections, drawdowns are up by 22%. Turnover for our clients is up by about 5%. We've seen Qatar Airlines buying 25% of SA Airlink. We've seen the telcos in our country selling their towers. You've seen investments in MultiChoice, the TV's network. My point being, much more activity, much more momentum in structural reforms, and growth of 3% on $400 billion GDP is a big deal.
That was Standard Bank CEO Sim Tshabalala speaking at the Future Investment Initiative Institute conference here in Riyadh. Now for a look at some of the other stories we're following this morning. Citigroup says it has moved some of its staff out of Lebanon as violence escalates in the region. The bank says they've been moved to Turkey after fighting between Hezbollah and Israel. Citi says it still has more than 20 employees in Lebanon and continues to serve clients as usual. The bank is the only major U.S. lender with a significant presence in Lebanon. Egypt is conducting a wide-ranging survey with the IMF to gauge the impact of dramatic economic reforms on the Middle East's largest population. The North African country has signaled it is seeking to review the targets and timelines of its $8 billion IMF loan deal amid regional upheaval. The fund says the new data should show the effects of 2 years of currency devaluations and price hikes on household spending, helping make social programs more effective. And coming up, Volkswagen to close at least 3 factories and slash thousands of jobs in an effort to turn around its struggling brand. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa, everybody. I'm Joanna Bersace in Riyadh today. Well, a really busy day in terms of earnings as well, not just interviews that we're bringing to you from FII. We just got Santander earnings break, and let me just bring the headlines to you. Third quarter net income came in at 3.25 billion euros. That is way through the estimate at 3.17 billion. So what we're seeing is a beat there. Net interest income, always interesting to look at. It came in at 11.23 billion. That is actually a shortfall versus the estimated of 11.57 billion. So a bit of a disappointment versus market expectations there. In terms of the CET1 ratio, it's coming in at 12.5%. That is in line with estimates as well. And then net loan loss provisions coming in lower than market expectations. So that is a market positive, 2.98 billion versus estimates of 3.18 billion. So what we got overall was a mixed set of earnings. Net interest income coming below expectations, but net income coming in higher than expectations. Jen.
Thanks, Shumana. Let's pivot to this other story we've been following. Volkswagen plans to close at least 3 factories, eliminate thousands of jobs, and slash wages as the EU's biggest automaker accelerates a cost-cutting plan. Let's bring in Bloomberg's Oliver Crook, who is standing by in Berlin for us. So, Oliver, what measures are VW management intending to take? I mean, what's the goal here for them?
Yeah, so listen, this is a really sort of dramatic move from the Volkswagen management, and it was delivered to the workers who it would affect for the very first time yesterday. And so what management is intending to do, and we should say this is just for the VW printed cars, this is not for the other sort of brands within the ecosystem, but it's an important brand because it's their mass market model and one that they've really struggled with profitability. And also, by the way, the one that will be competing with the Chinese automakers that will increasingly be part of Europe. So what they are talking about is closing 3 factories in their home turf in Germany. They're talking about potentially tens of thousands of job cuts. They're talking about a 10% pay cut across 140,000 employees, just to give you the scale of this business and how sort of massive that is. And if you think about this in the context of history, Volkswagen has never in its entire 90-year history ever closed a factory before. So this is really a very significant move from a car maker that has been very embattled for a period of time. And this is really the moment where we move off of the balance sheet, off of the profit warnings, off of 2 years of PMI manufacturing contraction and into the reality of people's jobs and their pay.
Yeah, and Ollie, I mean, that is really the crux here, right? This is affecting a number of people. So then what's the expectation for how this might play out?
So what's interesting about this is sort of the opening gambit for management. This is not necessarily what we'll be able to do because unions traditionally have been very powerful in Germany. I think what will be interesting when new union negotiations kick back off tomorrow is to figure out something that is important not just for Volkswagen but across Germany, which is how powerful is the German union in the year 2024. Even the unions have acknowledged that things need to change over at Volkswagen. But what they will say is instead of if you need to cut 4 billion euros worth of costs across the business, you paid 4.5 billion to shareholders shareholders last year and in dividends, you should do it there. But what that does not resolve fundamentally is that the cost base and producing things in Germany is very expensive. When you look at the hourly wage of a German automaker, of a German auto worker, it's 62 euros an hour. When you go over to Hungary, which isn't so far away and is still within the EU border tariff border, they make 16 euros an hour. And that is the fundamental issue that they need to resolve in terms of their cost base. And this is really going to set off what is potentially a lot of strikes and a lot of disagreements between the unions and management in the months to come.
It's a fascinating story. Bloomberg's Oliver Crook in Berlin bringing us that report. Oliver, thanks so much for being with us. And let's pivot back to Jumana. She's at the FII conference in Riyadh. It's just getting underway into full swing. Jumana, what's ahead for you?
Yeah, well, you can probably hear people beginning to sort of move into the conference room. If the noise levels have been moving steadily higher over the last couple of hours, it's because it is getting quite busy here. The first plenary is about to start. There will be an opening speech and then a big panel led by David Rubenstein alongside many very senior people from the industry, including the likes of David Solomon, who we had the opportunity to speak to a short while ago. Larry Fink also there, and some of the other big names. Later today, I'm going to be hosting a panel about the state of the global economy, including the Barclays CEO as well. So more banking voices to come. But as our Saudi Bureau Chief, Chrissy Burke, was saying earlier, there is a real big tech and AI theme. There's going to be a widely anticipated AI panel happening at 5 p.m. local time today. There will be a conversation between Andreessen Horowitz and an unknown person at this point. So it will be interesting to see who actually does show up for that 5 p.m. conversation. A lot of question marks in the air about who it could possibly be, but certainly does tell you that this time around the theme for the conference has been a lot more tech and AI focused than it has in prior years. And then, of course, the other sort of cloud overhanging the atmosphere this year is the geopolitical landscape. But I've got to say, in terms of the people, the action, the energy here on the ground, people are obviously concerned about the geopolitical situation turning for the worse, but it hasn't stopped the business momentum and some of the optimism that we're hearing from some of the news-making interviews that we've made already. But plenty more to come today, including an interview that we will be having with His Excellency Khalid Al-Falih, who is the Saudi Minister of Investments, alongside others as well. But a quick look at equity futures before we hand over to Daybreak Europe, and you can see that things are pretty much leaning sideways ahead of a big earnings day in the U.S. with many magnificent 7 names reporting this week. That is it for our show. Daybreak Europe is coming up next.